everyone, it's really nice to see you again in our class today. And our topic today is the accuracy of understanding about the VAT invoices. But before I elaborate it for all of you, let me introduce my team members. So the first there is Alpha Kevin, and then the second there is Abigail, the third there is Bait Putra, and the last is of course myself, Monica M. Damanik. So in this topic there are about 4 learning objectives. The first we will talk about tax invoices, and then the second learning objective is input tax invoice credit for integrated submission, and the third is input tax compensation for the integrated submission of financial statement paid for the following February, and the last we will talk about e-invoicing. Let us start from the first one. It is tax invoices. So what is the definition of tax invoices? So here I found that tax invoice is an invoice issued for taxable supply of goods and services. And tax invoice broadly contains detail like description, quantity, value of goods or service, tax criterion, and other particulars as may be prescribed. And shortly we can say that tax invoice is a primary evidence for a recipient to claim input tax credit of goods and services. So that's it for the definition of tax invoices. And then we will talk about the details that may be contained in the tax invoice. The first there is of course there will be awards tax invoice, and then the second there will be a name, address, and contact, and so on. And then there's invoice number, and all of the detail you can see on the PowerPoint beside me here. You can read it clearly there. So the next is we have to know the requirement for tax invoices. It's different in varying countries implementing GST. A tax invoice is necessary for the following purpose. So we have about 4 purposes. Here the first is to support a registered person's claim for the deduction of input tax incurred on his standard rated purchases, and then to determine the supplies that should be included in the taxable period, and the third is determine the time in which the claim for input tax can be made based on the tax invoice received from his supplier, and the last purpose is the date of the tax invoice will define when the input tax is be counted for. So that's all about tax invoices. The next learning objectives will be explained by my friends. Thank you.
Okay, the next topic objective is input tax invoice credit for integrated submission. So first, we didn't know what is the definition of input tax cell. Based on Article 1.24 of Law Number 8, year 1983, at last amended in Law Number 42 of 2009 concerning value added tax. The input tax is stated that it's stated that input tax is a value added tax that should have been paid by a taxable entrepreneur due to the acquisition of taxable goods and or receipts of taxable service, and or utilization of intangible taxable goods from outside the customs area, and import of taxable goods. The next one is the basic principles of crediting input tax. Based on Article 9 of the PPN and PPNBM law, it regulates on the principle of crediting input tax. Input tax in the tax period is credited with output tax in the same tax period. For taxable entrepreneurs who have not produced and have not made the delivery of the tax payable, the input tax on the acquisition and or import of capital goods may be credited. Input tax that is credited must use a tax invoice that meets the requirements as referred to in Article 13, Paragraph 5 and Paragraph 9 of the PPN. And the last principle, if in a tax period the output tax is greater than the input tax, then the difference is the value added tax that must be paid by the taxable entrepreneur. Here's the next the continue of the principle. If in a tax period the input tax that can be credited is greater than the output tax, then the difference is excess tax which compensated for the next tax period. For the excess of input tax as referred to in paragraph 4, a refund application can be submitted at the end of the financial year. And the last one, input tax which can be credited but has not been credited with output tax in the same tax period. It may be credited in the next tax period no longer than 3 months after the end of the relevant tax periods, as long as it has not been charged as a fee and also has not been audited. The next one is the return of excess input tax. For the excess of input tax, a request for a refund can be submitted at the end of the financial year, except for the excess input tax. A request for refund may be submitted in each tax period by the first one, taxable entrepreneurs who export tangible taxable goods. Taxable entrepreneurs also who deliver taxable goods and or delivery of taxable service to value-added tax collectors. Taxable entrepreneurs also who deliver taxable goods and or delivery of taxable service whose VAT is not collected. Also, taxable entrepreneurs who export intangible taxable goods. Also, the taxable entrepreneurs who export only taxable service, and the last one, the taxable entrepreneur is in the non-production state as referred to in paragraph.
Hello everyone and welcome back. Nice to see you all. Good morning in Indonesia. And right now I'm going to talk about value-added tax compensations. Let me share my screen. Here we go. All right, so what is this VAT compensations? So value-added compensation occurs when there is an overpayment made on a certain period, So an example, Andy in December 2020, make a payment of 10 million payable VAT. Now it turns out in January, an audit in January, they found that the 10 million of paid VAT in 2020 were overstated by 1.5 million. Now this 1.5 million overpayment are belong to Andy, which can be returned in many ways, such as compensations. It happens when the taxpayer paid their tax less than the amount of what they should pay. The second one is to reduce the amount of tax payable in the next period, or the third one is restitution, or basically returning the amount of overpaid tax in the previous payment. We will discuss it one by one. The first one is value-added tax compensation. It occurs when the taxpayer paid their value-added tax less than the amount of payment they should pay. So for example, so like before, Andy make an overstated value-added tax payment by 1.5 million. We will consider this 1.5 million as a balance of overstatement. We will see it later. I will discuss it later. Now in January, Andy's accounting department makes another mistake that makes Andy pay 7.5 million of value-added tax, in which he's supposed to pay by 8 million. So there is understatement of 500,000 rupiah. Now this underpayment of 500 rupiah of value-added tax can be covered by any overpayment made in December. So here it is, the payment made in December 20. There is a payable of 8.5 million. Andy make a mistake by paying it 10 million. So Andy have a balance of overpayment by 1.5 million. Now in January 2021, Andy makes another mistake by paying 7.5 million of value-added tax where he's supposed to pay 8 million. So that creates an underpayment of 500,000 rupiah. Now this underpayment of 500,000 rupiah, which is displayed in red here, can be covered by reducing the amount of overpayment. As we can see, the underpayment are paid by the overpayment, in which reduce the number of overpayment in resulting of 1 million remaining of overpayment. Yeah, it's pretty easy. I believe you guys can understand it straight away. Now the second one is value-added tax reductions. Occurs when the taxpayers pay their value-added tax more than the amount of payment they should pay in the previous payment. So basically, they request a reductions of value-added tax based on the amount of value-added tax overpaid in the previous period. So upon using the same example, upon value-added tax payment in January 2021, Andy requested a reductions of 750,000 rupiah. Okay, so this reduction of this reductions of 750,000 rupiah of value-added tax will be payable and taken from his overpayment made in December 2020. So here it is. I make another column named underpayment. Now in January 2021, Andy wanted only to pay 7.25 million rupiah, which make an underpayment of 7.5 thousand rupiah. And then this underpayment can be covered by using the overpayment made in December 2020. So the overpayment were reduced with 750,000 rupiah to cover the amount of value-added tax payable, in which reduce the number of remaining overpayment by 750,000 rupiah. Very easy. I believe you can understand it really fast. And the third one is to return the overpayment made in the previous payment. So using the same example, in January, Andy requested to restitute all of his overpaid value-added tax. So this restitution request will reduce the remainder of Andy's overpaid value-added tax made in December. So here is the transactions made by Andy in December 2020, creating an overpayment of 1.5 million. And then in January 2021, Andy paid all of his paid value-added tax payable by 8 million, and which does not affects the overpayment in that period. Now a restitution request, and they requested all of the overpayment in January 2021, in which makes a value-added tax return of 1.5 million and left nothing in the overpayment balance. So that's quite easy, very easy in terms of value-added tax compensations. Nice to see you all again.
Now I will explain about e-invoice. What is e-invoice? E-invoice is a tax invoice made through an application or electronic system determined and provided by the DJP through the taxation service provider or PJAP, Digitis official partner klikpajak.id. So here are e-invoice legal basis. The first one is PMK number 151 slash PMK dot 011 slash 2013. It contains the definition of the latest form of tax invoice. The second one is regulation of the Director General of Taxes number PER strip 16 slash PJ slash 2014. It contains procedures for making and reporting tax invoices in electronic form. The third one is regulation of the Director General of Taxes number PER strip 17 slash PJ slash 2014. It contains about the shape, size, procedure for filling out information on notification procedures, for making, correction or replacement procedures, and tax invoice cancellation procedure. The last one is Decree of the Director General of Taxes number key EP 136/PJ/2014. It contains about stipulation of taxable entrepreneurs required to make electronic tax invoices. Here are 3 steps to fill in e-invoice. The step 1, the first one is must fill in the code in tax invoice serial number or an SFP that has been obtained from the DGT, which is requested online with the number provided, taking into account the last 3 months of an SFP usage. The second one is enter the name, address, and taxpayer identification number or NPWP of the company submitting the BKP or JKP in the taxable entrepreneur column. The third one is enter the name, address, and NPWP of the company that purchased or received BKP or JKP in the BKP or JKP recipient column. Here are the steps 2. The first one is enter the serial number in accordance with the order in which the amount of taxable goods or services submitted. The second one is enter the name of the submitted BKP or JKP. The third one is enter the nominal price in the selling price or replacement or advance or term, or if the nominal is not in rupiah, then you must have a special non-rupiah nominal tax invoice, namely the foreign currency tax invoice. Here's the last step. The first one is the total is written in the selling price or replacement, advance, or term column. The second one is the total value of the BKP or JKP discount is written if there is a discount in the deducted price discount column. The third one is if you have received the down payment after the submission of BKP or JKP, then the nominal amount of the money can be written in the column value of advances received. And then the total selling price or replacement or down payment or term is reduced by the discount and down payment that has been received, then written in the column basic for imposition of taxes. And then the amount of VAT payable is 10% of the DPP, written in the column VAT equals 10% times tax imposition basis. The sixth one is in the PPNBM column. It is only filled in if there is a submission of BKP which is classified as luxury. You can fill in the following way. The amount of PPNBM rate is multiplied by DPP. The seventh one is enter the place and date when making the tax invoice, and then last, enter the name that has been appointed by the company. Must match the name of the official when the company officially becomes a PKP. So there are 3 steps to fill in into invoice. It is quite easy, right? So I think that's all I can explain about it. Thank you for your attention, and I hope this explanation can help you to understand more about the topic. Thank you.